Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today we have our resident mining analyst, Jordan of Mining Stock Monkey. Jordan is an expert in dissecting company balance sheets and finding undervalued opportunities. He has been making waves in the commodity investing space with deep dive research and a relentless curiosity about the metals and mining sector. In today's discussion, we will talk about macroeconomics and portfolio strategy. We will ask company-specific questions, the ones that you submitted. Jordan has a special gift for you, so stay tuned for that. Jordan, thank you for coming back on the show.
Thanks for having me, Steve. Glad to be here.
Yes, we are glad to have you, sir. Let's start out like we always do. And what is your macro view of the world economy and financial markets today?
Well, I used to focus a lot more on the macro in the past than I do now. And for probably at least the last 5 years, almost my entire focus has been on the micro because really I feel like that's where the money's made. And there's so many variables to try to predict macro trends that I think a lot of times it's wasted time that could be better spent elsewhere. Now, I do have some views on it. For example, like it's been a long time since we've had a real recession, like a recession caused by the economy, really. I mean, yeah, there was a worldwide recession during COVID, but that was because of this 1 in 100 year disease and then government shutting down the economy. So yeah, if the government doesn't allow you to go to work, of course there's going to be a recession. So I don't really count that. So I think the last real recession goes back to the financial crisis. So 2007, 2008, 2009. So, I mean, it's been almost 20 years since that. So I do fear another recession coming up. So that does have some influence on what bets I'm willing to make in the markets.
Okay, so you focus on your strength, which is more the micro than the macro. But you also can't ignore that it's been a long time since we've had a real recession, almost 2 decades since the great financial crisis. And so that will have a slight impact on what investments you're making today.
Yeah, for example, if I'm considering a copper investment, knowing that copper will get killed in a worldwide recession, well then there's been things that I've been delaying that I've wanted to invest in, or maybe I'll take a smaller position, or maybe I'll only go with a low risk copper play rather than a higher risk copper play.
Okay, that makes perfect sense. Okay, all right, we got some listener questions here. I'm really excited for these. So, Boy Wonder wants to know, he says, can you and Jordan please discuss the 2 or 3 most obvious events or drivers that will continue to push gold and silver higher? Like what news should investors be watching for?
Now, I think we have to look at what could push gold and silver higher, but also what could push it lower. In terms of silver, one of the biggest things in terms of demand is the solar industry. The solar industry is consuming a few 100 million ounces of silver per year, and that's been growing every year. If that continues to grow, that will put some upwards pressure on the price. But then on the other hand, if you have a bad harvest year in India, that's going to put a lot of downward pressure on the price because these Indian farmers save in silver. And if they have a bad harvest, they make less money. They have to sell their silver to feed their family. And when you have 1.5 billion people selling silver, well, that can push the price down. In terms of gold, I think the biggest thing that's been driving it was the US essentially stealing Russia's money after the war in Ukraine started, the Russia-Ukraine war. And I think that's it's made a lot of central banks hey, we got to have less exposure to the dollar, because if they've done that to Russia, they could easily do that to us. And perhaps other countries could do that to us as well. So I think that's been the single biggest driver bringing the gold price higher. Now, of course, there's government deficits every year, and those deficits are increasing, and that's increasing the debt that's compounded thanks to those annual deficits. Now, so I think excessive government spending and excessive government debt will push up gold in the long run. But I mean, we've had many, many years. There's been long periods where government spending has been insane and the debt has increased a lot, but the gold price has been really weak. So just because there's a lot of government spending and they're growing government debt really fast does not mean that the gold price is going to go up. I think it's one contributing factor, but this goes back to there being so many variables that it's really hard to predict. Now, I no longer think gold is cheap. It's what, $3,300 an ounce today. It's tripled since 2016, tripled from its lows in 2016. So when something's tripled in 9 years, that it's certainly much more expensive than it was. But it could go a lot higher. Looking at what it's done in previous bull markets, it's gone up 7 times, 10 times, or even more.
Okay, that was interesting what you said about silver. I mean, I've thought about solar quite a bit, but I never thought about. I knew India would, they save more in silver than they do in gold, but that's an interesting take. And then as far as gold, of course, the best thing that could have happened to gold was when the United States, our big thinkers, decided to steal Russian assets. That caused a worldwide response by central banks of gobbling up all the gold that they could, which was certainly helpful to the price. Debt and deficits are a tailwind for gold, and I think the number one thing that I fear as a gold investor is, it's kind of a joke, but it's also serious, is that they balance the budget, and that doesn't look like it's happening anytime soon. So I'm kind of unworried when it comes to that, but we'll see. Okay, so portfolio strategy and retirement. The captain wants to know. He says, besides natural resource investing, does Jordan have any retirement accounts like a 401k, a Roth IRA, or is natural resources part of your retirement account?
I have retirement accounts, but it's all in natural resources.
Okay, that's your strength, so that's what you stick to. Okay.
Exactly.
Okay. Now is do you prefer, so like as Americans, neither one of us are a tax advisor, but you can read all the disclosures down in the notes of this. But do you take specific bets? For example, in a Roth IRA, you've already been taxed on that, right? So are you more likely to place certain bets in that Roth IRA account than you would in like a brokerage account?
Yeah, for example, I'm going to own my royalty companies, or if I want to buy the Sprott Physical Uranium Trust, for example, I'm going to own that in a Roth, because the way that's taxed in a brokerage account, you either have to file these annual reports, these PIFIC elections, and pay your portion of the annual tax on those, or you're going to be hit with massive penalties if that's in a regular brokerage account. So yeah, my Roth or my 401k or my tax deferred, either tax free or tax deferred retirement accounts are going to typically be filled with those royalty companies just because of the way they're taxed in the U.S.
Okay. Yeah. And what's nice about those accounts too is that you don't have to hold them longer than a year. If you have a massive move on something, you can sell it. There's no tax implications because you've already paid the tax before you put the money in. So that's kind of nice.
Yeah, it's not the case if you have a tax deferred account like a traditional IRA, but it's still the same thing. Like with a traditional IRA, you would just pay the tax when you make those withdrawals in retirement, and you aren't taxed on gains throughout the years if you decide to sell a stock. So yeah, that's nice.
Yeah. Yep. Okay. And Real wants to know, he says, as a long-term investor, when should one take profits? Are there any good rules of thumb, like selling half when a position makes 100% return, or do you always assess it individually and the hard way?
Well, if I had rules like that, I would have destroyed my biggest gainers. So no, I don't employ any rules like that. But I'm doing this full time. So maybe if you don't have all the time to dedicate to this like I do, maybe you need to. Maybe that's a good idea. But I think you should have I think you should have an exit strategy when you buy a stock. You should have some sort of investment thesis. And if that thesis plays out, well, then maybe it's time to sell after that thesis plays out. Or if you have an investment thesis that doesn't play out, maybe that's also a time to sell. But in terms of like when to sell, a lot of times for me, it's price to value. But then other times there's some news event that changes my investment thesis. I would like to share a few examples with you. So back in, well, I want to say 21 or 22, I bought Bluestone Resources. It was a Lundin company. They were advancing this gold and silver project in Guatemala. And they were hopefully going to bring that into production. I paid about $1 per share for those shares. And the price ran up quite a bit, while the other stocks I was interested in the like similar stocks in the same market, like gold and silver stocks, they were basically flat or even down during that time frame. And the Bluestone stock had gone up from $1 to $1.60 or $1.70 on no news. Nothing had changed with the company. And then all these other stocks were just as cheap as they were before that I wanted to buy. So in that case, I sold because of a big run up on no news. Now, I would not have guessed what was going to come next, but over the next couple of years, that stock fell hard. And then I ended up buying back the stock in late 2023 for 20 cents per share. It fell almost 90%, or what is that? Yeah, $1.70 to 20 cents. And then it continued falling further. But yeah, so I bought back a bunch of shares at 20 cents. Then it continued falling. I bought more at 14 cents. And I really backed up the truck at 14 cents because I thought it was just too cheap at this point in time. Now, the stock over time, over the next few months, it didn't take very long, but it ran up to about 30 cents. But then there was one day where it was more volatile than normal. And it had fallen, I forget, maybe had fallen 6, 8, 10% in one day. So events like that make me do research into what's going on with it because maybe somebody noticed something that I didn't. So then I looked into that. I'm in Facebook groups for where that community in Guatemala, where that mine is going to be built in Asuncion. So there's stuff posted about there, and also there's the Guatemala like various Twitter accounts and stuff, like the MARN, the environmental agency for MARN. And basically, in my research, I ended up finding a tweet saying that they were looking into canceling Bluestone's permit.
Oh, wow.
So I sold everything immediately. And that was almost a double in like 3 months. Now I was rewarded with me discovering that with the stock price going from 30 cents up to 50 cents. But it was about a month after I sold that there was a press release from Bluestone saying that the government is looking into reversing their permit. And then the stock collapsed back down to, I forget, 10 cents or something. So that sale was, I bought based on price to value, and I sold based on a news event that I anticipated. I really like this question of when to sell, though. So I'd like to give another example. Back in 2020, the copper price had collapsed, and I thought the copper price was going to recover. Now, also, I generally think when a company is building its first mine, assuming those people have mine building experience, that's generally a good time to buy a stock. It's what Lobo Tigre has coined the pre-production sweet spot. So there was this company building this big copper mine, in Congo, Ivanhoe mines. And they had this tier 1 copper mine, but they also had 2 other tier 1 assets. And I thought the copper price would recover, and I thought we would get a gain from them going from being a developer into a producer. So I think it was around May 2020, I bought for $1.90, $1.95, something like that, talking US dollars. And I saw that stock just steadily rise as they were getting towards, like, getting more complete in their mine build as the copper price was recovering. Now, this was a very risky stock because this is the Congo. There's a lot of risk in Congo. Like, wasn't too long ago that a civil war there killed 2 million people. And I mean, you get a lot of stuff like that in Africa, unfortunately. And then there's all sorts of diseases and lack of infrastructure and warlords and people trying to expropriate mines. So I placed a pretty big bet on Ivanhoe. So as it had doubled, my pretty big bet got really big. And then pretty soon that was a triple. And pretty soon it was a quadruple. But they hadn't gone into production yet. But I was looking for a time to sell. And it was such a huge position for me that I was researching every day, trying to figure out if anything's going wrong in Congo, just looking for a reason for my investment thesis to change. If I had a rule to sell half after a double, I would have missed out on massive gains. But the thing that ended up causing me to sell, I woke up to a press release from Ivanhoe one morning saying that Congo made it illegal to export copper concentrate. It's like, that's all Ivanhoe's doing. That's what they have to do to make any money. And my quick read into the situation was there was sorry, I'm having a little brain fart here, but the company that processes the copper concentrate, I thought that there was a company in Congo that processes the copper concentrate, the smelter, that they probably had some ties with top level government officials, and they made those government officials make that illegal so they could get that smelting business from Ivanhoe. Now, I didn't know how Ivanhoe was going to solve this problem, and that was exporting copper concentrate was going to be their single source of revenue. So the stock was down like 8% or something that morning, and I sold everything. That was, so it was a news event that changed my investment thesis, or at least I didn't know how they were going to solve that problem. So I ended up selling that for about a quadruple. Another time, so going back to 2022, I was an investor in Altius Minerals, and I was reading all their quarterly reports, listening to all their quarterly earnings calls and things like that. And Adrian Day asked a question in one of those earning calls to them saying, are there any companies you're buying shares of in the open market right now? And Brian Dalton, CEO of Altius, said, yes, we're buying shares of Aventus Mining, and we're buying shares of Orogen Royalties. So it was that event that triggered me to look into Aventus and Orogen. And after looking into Orogen, I decided to start buying. And the more I researched it, the more convinced I became. So I was buying a lot of shares at 28 cents, 29 cents, talking US dollars here. And as a matter of fact, I was so confident in it that I was telling my dad, buy as much as you can, buy as much as the market will sell you. There were days that I was the entire market. Like it trades, I don't know, 30,000 shares a day or 35,000 shares a day, and I was buying 30,000 of those. Now, it went up I forget, maybe to the high 30s. And then it went back down. I think it went back down to about my entry level. But then a little while later, it was up at 50 cents. So I had almost a double. And I was buying as much as I could. So this was a huge position for me. Now, again, if I had one of those rules like sell half at a double, it would have ruined my gains. So this a sale of Orogen was really uh, more of price to value. Do I think the price is worth more than, or do I think the price that the stock is selling for is more than the company's worth? And that was hard. That was hard to determine when Anglo Gold was giving us no information on silicone. They were being extremely secretive for quite a while. But I knew they were drilling a lot. I knew they had a lot of drill rigs out there on the project. So I knew they were finding something of significance. And they were spending a lot of money to consolidate the district, like their purchase of Corvus Gold, for example. So I knew based on how much they were drilling and how much they were spending to consolidate the district, that they were probably onto something big. And in the meantime, we had revenue coming in from First Majestic's Ermitaño mine in Mexico. So the company was in good financial shape and they had no debt and they had cash on the books and generating cash every quarter. So we didn't have to worry about dilution. So it was all about price to value. Now, after Silicon consolidated that district, we started getting a lot more information. And they started out being like, we have, I think it was 3 million ounces here. Then it was, there were quite a few steps, but they were updating us every quarter after they consolidated the district. Then it was 6 million ounces. Then it was 9 million ounces. Then it was, I forget, 13 million ounces.
13 and then 16.
And then 16. Yeah. Now recently I feel like they're being secretive again, but I had built a very large position in this. I ended up having to sell, not because I wanted to, but because I was buying another business. So I basically had to liquidate all of my shares of everything that I had to be able to purchase this other business. However, my family still had a huge stake in it. And it was my family's most important stake. And I mean that, although I don't have direct control over that, what they do, that is my inheritance. So it still became very important for me to follow the company and to give advice to my family on what to do with that. And like me, they started out with a large stake, and then as the share price grew and grew and grew, that large stake turned into an enormous stake relative to the rest of the portfolio. So it got to the point where this was another example where the stock price moved a lot one day. It was something like 59 cents and it jumped up to 65 cents in one day. And that was a big move for Orogen. It usually didn't move that much. So I went looking for the reason why it moved, why it went up 6 cents in one day. And you have to know a company well enough to know where to look. And I'm like, okay, if the stock is moving that much in one day, it could be some newsletter writer recommended it. Or it could be, in which case you're not going to find anything. Or it could be like there was some promotional video or they're running some promotional activity where they're doing conferences or they're paying various YouTubers to do video on Orogen, doing CEO interviews and stuff like that. Sometimes it's things like that, but sometimes it's some sort of news event related to one of their assets. And I thought, okay, this is probably related to Ermitaño in Mexico, or this is probably related to Silicon. It's probably one of those two. If it's a news event that made the stock price jump 6 cents today. So then I looked, and Anglo Gold had released this really long technical report, and buried on something like page 200 of this technical report, there was a scoping study on the silicon deposit. And this scoping study had 2 years of pre-stripping, with 1.1 million ounces of production in year 3, 1.8 million ounces of production in year 4. And that's basically the biggest gold mine in the world at that point. And then it dropped off after that, but it was still going to be 900,000, 800,000, 700,000 ounces a year. And this was only based on a tiny portion of their drilling that they've done up to this point. So I ran some net present value calculations on what that could look like. And I came up with a fair share price that was at least double what it was trading at of 65 cents. And that's the day that I recommended it in my newsletter. If this goes into production at anything like what the scoping study said, this is going to be incredibly valuable. So even though my family had more than a double at that point, I was like, no, you got to hang on to it. This stock is going to be worth so much more than this. And then it was just a matter of hanging on tight and letting it run, and always paying attention to price versus value. And now I still haven't made a sell decision on that. It's still a hold. So those are a few examples. I've spent so much time talking about when to sell, but this is a really interesting topic. And sometimes it's a news event. Sometimes the stock runs for no reason whatsoever. And I just feel like there's better ways to deploy the money. And now, like, the reason I bought it is no longer there, or not there as much, because usually a big reason for buying it is because it was trading at a big discount. And then other times it's price to value, like in the case of Orogen, that I always felt like it was trading for less than it was worth. So it was just a matter of hanging on tight.
Okay. So what I hear you saying from that is that you don't necessarily have any hard and fast rules, like when it's double, sell your position or anything. You're basically looking at the question you're asking yourself is the price it is selling for worth the value? And if it's cheap, you buy it. If it's expensive, you sell it, is in a nutshell.
Yeah, basically. And then sometimes there's some news event that I discover. And a big thing I look at for discovering these things before the market knows about them. Like, I knew about this scoping study before probably 99.5% of the market did, because I saw the stock price move more than usual in one day. And then I went looking for what happened. And same thing with Bluestone. I saw the stock price fall more than usual in one day, and I went looking for the reason why, and I found it.
So you pay attention to the volatility, you get to know the company, and this is why your newsletter is my favorite newsletter, Jordan, because you are so detailed, and you will find that little detail on page 200 that the rest of us won't.
I mean, not always, but sometimes I do, and finding those details can be worth a lot of money when you know about them before the market does.
Yes, yes. Okay, we've got some company questions here. Doman wants to know, and so does Jeff, and so does Moving America. They're basically asking about B2 Gold. What are your thoughts on B2 Gold?
I really like this company, and this was one of my top picks. But there was a recent technical report, or a couple months back, on Goose, and I hated this technical report. They, in their press release, they tried to sugarcoat this so much, and make it sound way better than it was. But a bunch of the reserves were downgraded into reserves. A bunch of the reserves were downgraded into resources. A bunch of the measured and indicated resources were downgraded into inferred resources. Basically, they needed much tighter drill spacing to have confidence in the resource. And then also their new AISC was way higher than I was expecting. So, for example, back when they bought the project, the most recent feasibility study had the all-in sustaining cost, life of mine, at $775 per ounce. This new all-in sustaining cost for the first couple of years of production is going to be $1,900 or $2,000 an ounce. So I really, really didn't like that. Now it's going to, a big reason for that in the first couple of years is because they're doing some big sustaining capital projects, such as building a power plant there, which will mean they don't have to bring up so much diesel every year on the ice road, and well, they can have much of their power supplied by the on-site power plant. Now, after that, we're going to be bringing it down to about $1,500 per ounce AISC, but that's still double what it was in the most recent feasibility study before that. So I really don't like that, but they have a lot of positive catalysts coming up. They have first gold pour coming up at Goose. I think the stock price is going to move on that. The day before the earnings call, they finally got approval. We've been waiting for this for a long time, but they finally got approval from the Malian government to combine their three Fekala regional permits into one permit. And they were waiting for those to be combined into one permit before applying for an exploitation license. Now that that is combined into one permit, the Menenkoto permit that it's being called now, well, then they're applying for an exploitation license, and that's usually a 30 to 60 day turnaround time. So I thought it was imminent before, but it looks like it's really imminent now. And also, they're awaiting an underground permit at Fekala Underground from Mali. And I think when they get that, that's going to be a big boost for the stock price. And then you have the Gramalote feasibility study coming up in June. You have a construction decision coming up in the third quarter for their mine to mine a satellite deposit at their mine in Namibia. Lots of positive things happening with the company. So even though Goose is a huge disappointment, I still think there's a lot of good things coming up here. Thought their first quarter results were pretty good. Their AISC was a lot lower than they were expecting. However, if you read the fine print, that's not to be expected in future quarters. If you read the fine print in their financial statements in MD&A, the AISC was lower in quarter one because there were some sustaining capital expenses that were supposed to occur in Q1, but they're going to occur later in the year. So that's going to bring up the AISC later in the year, and it's kind of like an artificial lower AISC now. But also the AISC should be coming down later in the year for various other reasons, like getting into higher grades at the Fekala mine in Mali, start mining that Fekala regional, start mining the high grades of Fekala underground. So those should bring costs down and production up, but that AISC is partially going to be offset by more sustaining expenditures happening in quarter two, quarter three, and quarter four of this year. So overall, pretty good quarter. Goose is still on track per the revised guidance. I like that. First gold pour should be in June. And what else? They made quite a bit of money. Most of their Goose spend is done now, so that's going to go from a cash burner to a cash generator here pretty soon. So that's going to do very good things for the company. But also in July, you have their gold prepay starting. Now, almost every company who's taken out a gold prepay has pushed it back. They've delayed that first payment because of delays in their mine build, or like they didn't get costs down as fast as they thought they were going to. So then they push these gold prepays out, and then the repayment of them is just extended and extended and extended. But B2 Gold was going to repay this $500 million gold prepay in just 12 months. And they're sticking with that. And they plan to continue. They plan to start paying that back in July, just like was originally planned. So they're going to get that out of the way really quickly. And they should be in the financial position to do that. But that is going to be a big liability for those 12 months. So overall, pretty good. There's things I don't like. There's things I like. Overall, I like the company. I do have a concern that maybe CEO Clive Johnson lost his step. Like he's had a long history of success, but he's getting older. And as you get older, you maybe lose your drive, lose some of your energy. But also, he lost his son a couple of years back, and I don't know him personally, but I'm sure that was super hard on him, and I don't know if that affects his business in any way, but it's something that I keep in mind.
Okay. All right. So it sounds like any company. There's some downsides and there's some upsides, but it sounds like there's more upsides that you see than down.
Yeah, I think that AISC at Goose is going to be a big disappointment once they release 2026 guidance to the market, even though that information is already available to us if you read the technical report. But most people don't read the technical report. They just read the press release that sugarcoated everything.
Yeah, yeah. Okay.
It
Okay.
was a long press release. It was like maybe 15 pages. There was a lot of information there, but they made it sound much better than it actually is.
Okay. Got to look at those like it's an advertisement.
Exactly.
Yes. Okay. Got another company question. This one is from Blaine and Arthur, and they want to know your take on Sandstorm.
Uh, Sandstorm, I like the company. They have a lot of growth that's already built in. Now, I was pushing this really hard in my newsletter. Just about everyone. It was like strong buy as much as you can, strong buy. But then in the past couple of months, the stock price has run up a lot. So now I'm kind of going back on that because it's less attractive. Like, you know, if if the stock price, I've heard Rick Rule say, for example, that if the stock price doubles, mathematically it's half as attractive. So mathematically, yeah, there's half as much upside left. But I think it's actually worse than that because your risk has also increased because a lower stock price means lower risk. So if a stock price doubles, you not only have half as much upside, you also have more risk of falling stock price. So there's that. Now, I did a pretty recent video on my channel that has my recent calculations for Sandstorm. So if you want exact numbers, go check out that video. Uh, and based on that, it was still trading at about a 20% discount to what I thought its fair value was today, and about a 50% discount to what I thought its fair value was in approximately 2030. So I still think it's a reasonably safe bet, but the gold price has run up so much, I think you have more commodity price risk now than you had before. But they have some big growth projects coming up. And lately, the market has not been rewarding growth for the royalty companies. The market wants to see cash flow, and the market is really only rewarding cash flow. I think that's changed a little bit in the last couple of months, but I still think that's mostly the case. But they have several big growth projects coming up. You have what's caused Sandstorm to be a major underperformer relative to its peers, like relative to a Cisco, relative to Triple Flag, is they paid $200 million for basically what was an interest in this Hod Maden super high grade copper and gold mine in Turkey. And they paid that in 2017 or 2018. Huge purchase for them at the time. And at that asset, there's just been delay after delay after delay. It's been a huge disappointment. But you know what? The net present value, despite there being delay after delay after delay, net present value today is higher than it was when they bought it because the commodity prices are so much higher. So the delay that we've seen has been more than made up for by the much higher gold price today. And I believe the copper price is quite a bit higher today than it was at that time. So that's good. And it looks like that's finally moving forward. SSR Mining spent over $40 million on that last year. They're now the operator. They recently said in their 2025 guidance that they plan to spend 60 to $100 million on it this year. And they haven't made an official FID, a final investment decision on that yet. However, I bet that's going to happen in 2025. I bet we're going to see an official construction decision happen in 2025. And that's going to be a big boost for Sandstorm share price. Also, you have the Mara project in Argentina being advanced by Glencore. Now, Argentina has these large investment incentives that they're trying to get a bunch of different mining companies to commit to making large investments, and they're offering big discounts on taxes and all sorts of other benefits to do that. However, they have to file a RIGI application. The acronym is RIGI, uh, by a certain date, and they have to start construction by July 2026 to qualify. And then they have to have like 40% of their construction done a couple of years later. So these companies have to move pretty fast. Like that might not sound fast to somebody who's relatively new to this, but to advance a big copper project, that is very fast decisions. And that's a really fast mine build to have 40% of a $10 billion mine build done in just a couple of years. But yeah, so that's another big project that's probably going to be advanced that a Sandstorm has a big interest in. Now, they have an option to buy a big gold stream on that, so they don't technically right now they only own a small royalty, but this option that they have is so valuable. It's so far into the money that I mean they could easily sell that for something like $500 million, but they're not going to. They're going to hang on to that. And yeah, so that's very valuable. And then you have Barrick bringing on the Robertson mine in Nevada, and then you have Ivanhoe Mines bringing on the Platreef mine in South Africa. That's going to bring in a ton of GEOs, gold equivalent ounces every year for Sandstorm here in a few years. Now they're probably going to receive first production from that in 2025, but that's really going to ramp up a couple of years from now, and that's going to be a huge contributor. So I think that like that's just 4 projects. They also have this Gualcamayo Deeps Carbonate project in Argentina that recently the operator submitted a RIGI application for, and now nobody saw that one coming. That came out of nowhere, but that's going to be a significant contributor as well. And then there's a bunch of growth projects like you'll see Greenstone, Equinox's mine, Greenstone mine ramping up. And also there's underground expansion project that's probably pretty likely to happen there in the coming years, and an Aurizona underground expansion project likely to happen. So there's lots and lots of growth there. So even though the stock prices run up quite a bit, I think that as the market sees these companies making final investment decisions and sees these mines being built, they're going to start giving Sandstorm more credit for that, and Sandstorm stock is going to re-rate higher. Despite Sandstorm's pretty big move already, I still think it's undervalued relative to its mid-tier peers like Triple Flag and Osisko. So I still think there's room to run, but I don't like it nearly as much as I did a couple dollars ago.
Okay. Okay. So you liked it a lot more when you recommended it in your newsletter. You still like it today, just not as much as when it was cheaper.
Yeah.
Okay. Tom wants to know, he says, where does Jordan stand on Empress royalty? He mentioned both a large potential project and possibly decreasing his position due to recession risk. How do you feel?
I don't feel like that's an accurate statement of what I said about Empress. Yes, they did press release that they have another royalty that's in advanced talks, but they never mentioned that it's a big royalty. They mentioned that it's a gold and silver project in the U.S., but we don't really know much about that. And I wasn't considering a sale of that based on recession fears. Now let me pull this up here. I said in my April, it was in my April 21st newsletter that I wrote something about this because I felt like the gold price had moved too much and we were already overweight gold stocks. And then after a big move in the gold stocks, we were even more overweight. So I was looking for something to sell. This is another example of a reason for selling because I thought that my portfolio had too much risk in that one sector because gold had run up so much so fast. But let me just read this. This was April 21st. Gold was at 34.50 per ounce. With gold shooting to record highs, we've seen a tremendous amount of volatility in the portfolio recently. Many gold stocks have screamed higher in the past couple of weeks, and I think the risk embedded in the gold stocks has increased because of this unhealthy run. Pullbacks are normal and healthy in a bull market, and we haven't really seen that, hence why I call it unhealthy. Now, when I was writing this, basically the biggest pullback we've seen in this entire bull market is 9%. Now, in past bull markets, in one bull market, we've seen pullbacks of 15%, 25%, 35%, 49%. Compare that to one pullback of 9%, another pullback of like 8%. The pullbacks in this bull market are nothing. I went on to say, also, given the recent increase in gold stocks, I no longer feel comfortable with this level of exposure to them. We were already overweight gold stocks because I really liked the risk to reward, but now we are extremely overweight and the commodity risk has increased because the gold price is so much higher. So it was for that reason that I went looking for something to sell. And when I was looking at my portfolio, I was thinking, what do I have the least confidence in here? And what I said about Empress in that was the price had moved so much. So we initially bought it at 25 US cents. It did nothing for months. The gold price continued going higher and higher and higher, and the stock was doing nothing. So it was in February, almost 2 months before I wrote that, or pretty much exactly 2 months before I wrote that, late February, that the stock price was still at 25 cents. It hadn't moved at all. I said, we're doubling our position here. We're bringing it from a 5% allocation to a 10% allocation because there's several reasons. I could go over that at another time, but there are several reasons why. But a big reason for that is because this is overdue to move. All these other stocks have moved. This stock hasn't done anything. It's not because of the quality of the company. It's not because of any bad thing about the company. It's just because the market hasn't recognized it yet. So, and then in those 2 months after we doubled our position to 10%, the stock price increased 50%. It went from 25 cents to 38 cents in 2 months. So a big reason for buying Empress was because I thought it was undervalued. I thought it was trading at a big discount to its net asset value. So in those 2 months, a big reason for buying it mostly went away. The discount to NAV mostly went away. It was still trading at a bit of a discount, but not nearly as much as it was. So that's what I said in that newsletter. Like, I considered trimming the position there because it's just not trading at so much of a discount that it was before. But I ended up not. I ended up not trimming it because that is our purest form of silver exposure that we have. They're about 40% silver. And later on in a gold bull market, silver tends to move really fast. So I want high quality silver exposure. No, I didn't end up selling any. I don't want to sell any. Now, if it moved a lot more, if it went up another 50% from here, maybe I would consider trimming that position because maybe then it would be 20% of the portfolio instead of 13% of the portfolio or something.
Okay. All right. So you like Empress?
Yeah. Sorry for these long answers. I'm
No, this
talking
is
a
great.
lot.
This is giving us an insight into this is what it's like when you're reading your newsletters. You have forgotten more about these companies than most of us know, which is amazing. Okay. Well,
Mhm.
that's why we have you, Jordan. I got to give a shout out to your newsletter. I'm a part of 6 paid newsletters, and yours is by far my favorite. It comes about once a week, and it's real down and dirty. Pretty simple portfolio, but a very detailed outline of each company, why we own it, what our exit strategy is. It's a really, really amazing newsletter, and I highly, highly recommend it. You have a special gift for anyone watching this that wants to sign up for your newsletter. Go ahead and tell viewers what they can expect if they sign up with you.
Yeah, thanks, Steve. I appreciate that. I do put a lot of effort into this and countless hours go into my research. And so I try to provide as much value as I can. But yeah, for anyone watching this, for the first 75 people who sign up, I'm offering a 10% discount if you click Steve's link that he's going to put in the comments and description. But last time I came on Steve's show, I made this offer to you guys and it sold out within 24 hours. And after that, there were no more. It's a hard limit. It's in the software. Once it reaches 75, that's done. So keep that in mind. But yeah, 10% off for as long as you stay subscribed.
10% off to the first 75, and you're right. Last time we did this, it sold out in 22 hours, so less than 24, less than a day. And yeah, I love your service, Jordan. Keep it up. You're doing a real service.
Thanks, Steve. I appreciate that.
Yes, yes. Thank you for coming on the show, Jordan. This was always a pleasure. You have a wonderful rest of your day.
Thanks, you as well.
And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.